Okay, everybody, it's me, Gregory Mannarino. It is Monday, June 5th, 2023. First of all, thank you all for your outpouring of love. Losing Josh is tough, but the prayers you've all sent out are definitely helping me and his family as well get through this. So again, from the heart, a big, big thank you. All right, with that aside, people here, this is my morning report, and there's something going on. There's a lot of things going on, but let's talk about fear. All right, there's a little fear here in the debt market. We have a sell-off again in the debt market. Yields are rising, and a little bit of a knee-jerk here into the dollar. So again, apparently President Mummy Man Bidenstein saved the world by signing this debt-raising legislation here. No, all we did was promise to borrow trillions of dollars more from the Federal Reserve. That's going to create much higher inflation, much bigger problems down the line, and we all know that. Look, they can continue to sidestep and try to sidestep and try to sidestep what is coming down the pike. Ain't no way to get out of it. And that plays right into some of the stuff I want to talk about in just a moment here. But let's look over at the market. As I said, you got stock futures flat with regard to the Dow Jones Industrial Average and the S&P 500. NASDAQ futures under pressure. Issues here in this debt market. It's like bouncing around like a freaking yo-yo. This is not normal. This is clearly signs of instability here in the debt market. Again, a little bit of a fear trade might be brewing this morning. You got the MMRI 242. Last time I looked at it, it's free to you, free to everybody. Link in the description of this video. Mannarino Market Risk Indicator. Risk is rising. Then, in my view, it appears as they are hell-bent on not allowing the MMRI to cross 250, that first line in the sand that you and I have observed repeatedly here. So 242, we're not far from 250. At 250, we may see some very interesting action here in the market here. Again, a debt market which is clearly unstable. That is the backbone of this entire freak show across the spectrum. You know that. What else is going on? Crude oil. Crude oil getting bid higher. No surprise to you at all. They always play these games with crude oil. We watched it drop to like $68 a barrel recently and some pretty significant jumps higher. Well, we're higher again this morning. Gold and silver, unfortunately, under pressure here, but good. Let them play their games. We're going to play our games. We understand the debt is going to continue to inflate on an unprecedented scale, so we're going to take the opposite side of that trade for the long run, betting against the debt, becoming your own central banks. You got cryptocurrencies right now pretty much across the board under pressure as well. That's the story. But again, markets go up, markets go down. It's the debt market right now that's sending us a pretty ominous sign. Now, I was watching Bloomberg this morning, and they were addressing the issues with regard to this yield curve. It's the most inverted we've ever seen in history. They're talking about recession. Forget about recession. We're going into a super depression, all right? And let's cover some of why that is a lock. There's no doubt about it. Here's some of the news. So Morgan Stanley seems to have the biggest mouth lately with warning after warning after warning. Morgan Stanley is warning, are you ready for this, of an earnings wipeout. Why are they warning of an earnings wipeout for the market here? Because the consumer is getting crushed. They're maxed out with regard to their debt across the board. They can't borrow anymore. Now, this gets even worse here. What do you and I understand has been going on since the Fed started raising rates many months ago? Oh, yes, it's definitely to control inflation because that's what they're telling you. So they're raising rates because they want to bring inflation down? No. You know it had nothing to do with that. It never has. It's clearly a mechanism here to limit the availability of credit. We've covered this a million times to small businesses. Well, here's a headline here for you. U.S. small businesses lending craters. Imagine my surprise here. These banks are not lending to small businesses here, which used to be the backbone of our economy. Now they want to wipe them out. That's really what's going on here, okay? This whole charade that has been sold to us by our politicians, by our imbecile president here, by Fed presidents and Fed chair people and co-chairs is, oh yes, they're in the fight of their lives. We're fighting inflation. No, it has nothing to do with that. They're crushing the economy. They are killing the consumer. And it's driving us not just into a recession, but again, into a super depression. What do you think is going to happen when small businesses here start to fall off the map as they've been? Look, this whole COVID thing, they shut down the economy. Really, what was that all about? To eliminate small businesses here, to wipe them out. They got about half of them during the shutdown, and they want the other half now, and they're going to get it. So that's that story. So headline number one, Morgan Stanley warning of an earnings wipeout as consumers get crushed. Here's another one here for you you're going to love. More corporate layoffs. So we understand this has been going on for quite a while here. These mega corporations laying off thousands, tens of thousands of people. What do they know that they don't want you to know? They're laying off these people because it's fun? Well, maybe it is for them. I mean, we know the agenda here. But the fact of the matter is, these institutions realize that we're going into a super depression, all right? The yield curve has been screaming this for a long time. You got central banks doing what they're doing. The Fed cutting rates here. Raising rates at a pace that we've never seen before, and it's only to destroy small businesses, limit the availability of credit here, crush the consumer, and it's absolutely working here. Now, yesterday, I covered the issues with derivatives and exposure. It's absolutely incredible. The top three banks, Goldman Sachs, JP Morgan, and Citigroup, over 150 trillion just in those three. 150 trillion, over 150 trillion in derivative exposure. This is the Achilles heel of the system. I think we're all pretty clear on that. And with regard to the banks, with the regional banks, their troubles are just getting started. And again, it's a consolidation, but I'm just thinking, and I covered this yesterday real quick, the reason why we're seeing such an effort to keep this market propped up is clearly to prevent a derivatives meltdown. It's going to happen anyway. There's no way to escape it. We all know that. But I tell you this, it's going to be interesting to see, and we're going to witness it. You and me are going to witness this. They're going to continue to prop this up. I would say this. Keep your eyes on that 10-year yield, the relative dollar strength here. They're going to, in my opinion, attempt to keep rates suppressed. We'll probably see the 10-year yield drop, the yield curve drop like we witnessed recently, some weakness in the relative strength of the dollar, and that will, of course, allow cash to flow into risk assets. So the place to be, at least for now, in the market is net long. Okay, you can play the market. You want to take advantage of short moves with regard to, let's say, the S&P 500, but I just can't see yet, okay, them allowing the debt market to implode. The debt market is going to implode, and an enormous effort is going into keeping it propped up. There's just no doubt about it. You can see it in real time. But with the MMRI sitting at 242, just 8 points below that first line in the sand, let's see what they do. Let's see what they pull off today. Are they going to allow this to melt down right now? I don't know. I don't think so. I could be wrong on this, but we'll see. It looks like, look, everything they're doing is working out to exactly what they planned it to happen. They're crushing the economy. They're killing the consumer. They're wiping out small businesses. They're wiping out an entire class of people as we move back into a feudal system, extreme haves, extreme have-nots. The disconnect between the economy and the market, that gap keeps getting larger and larger and larger. But of course, there's going to be a moment of reckoning here. And you and I, we don't really even need to think about it. We're in the right spots. We're betting against the debt, becoming our own central banks. Let them play their games, as I always tell you, with gold and silver. it just can't go on. When you have a situation of exponentially in perpetuity expanding debt with no end in sight, well, what do you want to do? What do you want to do? You want to be on the opposite side of that. And the only way to do it, the best way to do it, is to be in hard assets, gold and silver, commodities exposure. You know all this. I believe I had kept all of you well versed in how to take advantage of the situation, at least from a financial standpoint. And from a spiritual standpoint, what do I tell you every Friday? Love each other, care about each other, be charitable. Tell those people around you that maybe you haven't in a while, that you love them. Like I said yesterday, losing Josh was really hard. It's very difficult. I wish I would have told him, bro, I love you, or something like that. And maybe, I don't know, it's a terrible thing. But anyway, I love all of you, and that's the truth. All right, I want you all to know that. And I know you love me back because I got so many yesterday, and I really appreciate that. I appreciate all of you more than you know. I want to hear from all of you. What do you think about the stuff we covered? Sorry, God, my nose is itchy. In this video, very important. And please share this stuff. Get it out there. That thumbs up is super important, and it lets these videos get out there. YouTube says, "Oh, people like it. Let's share it." All right. Look, I'll see all of you later for the live stream, 1:05 p.m. Pacific time, daylight time. All right. See you later.